So unit is financial accounting, or what we call the principles of accounting and taxation for those that are doing CS. So I want to begin with the topic number 1, what we call the introduction to accounting. Introduction to accounting. Introduction to accounting. So when we talk about introduction to accounting, majorly this is all what will form the basis of us understanding what we are supposed to do in accounting. And when we talk about introduction to accounting, we'll be able to understand what we mean when we talk of accounting, who are users of this accounting information, and what are the quantitative characteristics of a good accounting information. And then we'll also be able to talk about the accounting concepts or principles. So when we talk about this accounting, what do we mean? Now, accounting here is the art of recording, summarizing, classifying, and analyzing financial transactions. So is what we mean when we talk about accounting. Now, we'll be able to see how we do what we call the recording. How do we do the classification? How do we do the summary? And also how we do the analysis. So begin by saying that accounting is the art of recording. Accounting is the art of recording, summarizing, classifying and analyzing, financial transactions, classifying and analyzing financial transactions, analyzing financial transactions, interpreting them their own. Now, when we be talking about the recording, we record financial transaction. Here, we use what we call the double entry system. The double entry, where the double entry states that once you debit a transaction, you have to credit another transaction. Generally, is one of accounting concepts we call the duality concept. You debit a given transaction, you have to credit another transaction. We'll also be able to talk about what we call the classification, classifying. Now, also, we classify financial transactions. How do we classify them? Now, for example, here we'll be having what we call the revenues. Now, there are major various sides of revenue, like sales may have a revenue from what? The rental, or generally what we call the incomes. We'll be able to do so. Same case to expenses. Expenses, you can categorize them into 3. There is what we call the administrative expenses. There is what we call the selling and distribution expenses. There is also what we call the interest expenses, mainly the finance cost. We'll also do what we call a summary, because in financial transaction, you don't record everything. You don't record everything. What do I mean in this case? We don't record all the sales that you made each and every what. Yeah, you just make a what. Yani when you are presenting, you will not present to me month by month what sales. You have to give a summary of the whole sales that you made during that particular what? Financial year. Sawa. Then also, as we also do what we call an analysis. Analysis of financial transaction is what will tell you what is the performance and position of that given organization. When I talk of performance, is in terms of profitability. And here, mainly, we measure on what we call the what? The ratios. Like, for example, profitability ratios, they will tell us the performance of the business. If you look at what we call the valuation ratio, they will tell us the position of the business, the position in terms of value, and whether the company will continue as a going concern. So that is what we mean when we talk about that. So you can talk about the objectives of accounting. Objectives of accounting. Let's talk about the objective of accounting. Now, what is the objectives of accounting? What is the objectives of accounting? Is one of the questions I see. I think it was in the CS paper. You are asking. You were asked on the objective of accounting. The question is, why do we do accounting? Sorry? To determine the position of a business pressure. Why do we do accounting? Why do we do the accounting? The performance. Yeah, to estimate the profits and losses. What else? All right, you can write number one. The number one, you say objective of accounting number one is to maintain a systematic financial records. To maintain systematic financial records. Maintain systematic financial records. Number two is to estimate and ascertain profit and losses. To estimate and ascertain profits and losses. Profit and losses. The one is to prepare financial statement to assess financial position of the company. Prepare financial statement to assess the financial position of a company. Yeah, that is number three. To prepare financial statement to assess financial position of the company. Financial positions of the company. The other one is to ensure compliance with laws and legislations. Ensure compliance with laws and what? Legislations. And I talk of laws and legislations here, we are talking of, for example, in the cases of tax laws. How do we pay taxes? For businesses, they pay taxes out of the what? Profits, meaning that they have to prepare it for them to ensure that they are complying with the tax laws. So, compliance of laws and legislations. Sure compliance with laws and legislation. The one you say it helps in decision making, or to help in decision making. To help in decision making. Now, how does this help in decision making? Now, we know the management are the one that do the day-to-day routine decisions of a business. And for them to be able to determine or to make a decision, they have to be aware of the profits and also the what? Positions. Sawa. Like for example, if the company is not doing better, sawa, they can consider making a decision like going forward, a merger. You know what's merger? You know what's a merger? Yeah, merging a company is what? Is a combination of what? And remember, there is difference between merger and acquisition. Sawa. A merger is where a company is just a combination of two or more. In a merger, there is no company that dominates over the other company. Sawa. In a merger, if you combine those two companies, there is no company that will be dominating over the other company. They will be of the same level. But now when we talk about acquisition, is what we also call it the takeover, where in this case, there is one company we call the predator that will acquire the other company known as the target. So in the case of acquisition, the predator dominates. Or generally what we mean in this case, the predator maintains his original identity. But for the target, we lose what? The identity. But in a merger, they both lose their original identity. That is why in this case, they have to come up with a new name. So you have to differentiate between the two, merger and acquisition. So as I've been able to say, to help in decision making is in making such decisions. Company is not doing good, probably. Company is making losses. So, or the company is having financial difficulties. So in such situations, the determinant is either on the income statement where you now be able to see the profits or losses, or on what we call the statement of what? Financial position. When I talk of the statement of financial position, we are generally talking about now the balance sheet. The balance sheet is what tells us whether the company is going what? Concern. If I say going concern is whether the company will continue in operational existence for a foreseeable what? Future. Are we together? Yeah, so that is also another one. So it helps us in what we call the decision making. Also, to help in assessing the company's value, to help in assessing the company's value, to help in assessing the company's value. This is also generally when you want to go to what we call a merger and acquisition. Remember, before you merge, you have to determine the value of that other company that you want to do what? To merge. And how will you be able to determine that? Generally through what? The financial, doing the accounting. I say again also, can also talk of to assess, that is number what? Number 6, another objective is to assess the credit worth. Number 7, to assess the credit worth of an entity. Says the credit worth of an entity. Now this is generally in the case of now the financial institutions. I talk of financial institutions, I'm generally talking about the banks, the insurance companies, or the circles. That is generally the microfinances. Now, for them to determine on whether they're going to give you a loan, if it's a loan, what will they use? They use your accounting. So, the financial statement that you have prepared to them. Yeah, if they see you are making losses, you will not be given the what? The loan. Yeah, and those are the objectives of accounting. Yes? Why do I say what? I've already explained. When we talk of assessing the company's value, is the worth of that company. Yeah. How much is it worth? If you are buying that company, how much is the value of that given company? So. Now, let's talk over the users of accounting information. Users of accounting information. Now, in this, the question is, this is one of the commonly asked questions here. And always the examiner wants you to talk of who are the users of this accounting information and what is their information needs. When I talk of information need is, yes, I want to use this accounting. What do I want to get from that information? So, like for example, number one, I will begin with what we call the management. Now, management, they will be concerned with all the financial statements. When I talk of financial statement, I'm generally talking about the income statement and what? The statement of financial position. This is to help them in doing what we call the day-to-day routine decisions of the what? Company. Because it's the one who will determine what is it that we need to do if this is how this business is what? Is doing. So you write and say, they use accounting information. They use the accounting information. They use the accounting information. They use the accounting information to determine. They use the accounting information to determine, or to make, sorry. They use the accounting information to make day-to-day routine decisions. To make day-to-day routine decisions of the business. Decisions of the business. So, as I had already explained, they can use this information to know whether the company can go into what? A merger. So, are we together? Or they can do what we call a takeover. So. Now, also management can also use this to determine the amount of dividend to be paid to shareholders. Are we together? Or are you not aware? Who determines the amount of dividend to be paid to the ordinary shareholders? It's not the shareholders themselves. It is the directors of the company. And the directors of the company in this case is part of the management. Are we together? Number two, second category of individual is what we call the shareholders. Now, one of the major things that I always say here, it is always good for you to differentiate between the shareholders and what? Management. Now, shareholders do wanaandika hawa. So these are now the management is the stewards of the shareholders. But now there is also another thing that will also be able to talk in accounting, where you'll be able to realize that the shareholders is totally different from the management. Because when I talk of management, I'm talking about the business. Are we together? It's one of the concepts we call the business entity concept, where the business is regarded to be separate from its own. So kama huyu ndio mwenyewe na huyu ndio biashara, the business, because he's the one who is doing the management. So here and this one, we talk of them as being different. And ndio maana nikawambia huyu ndio atadetermine the dividend huyu atalipo, hata kama ni amemwajiri. Because that is what we call a separation of what? control from ownership. Kifika huko intermediate kuna company law. In company law, there is a topic we call the nature and classification of companies. Also, and on the nature and classification of a company, one of the characteristics of a limited company is what we call the separation of ownership from what? The control. Because when I talk of control is the management, ownership is the owners. Now hawa ndio nawaitanga third parties. In the business, in accounting language, these are what? Third parties. Pamoja. Only thing that they are depending is the information in our pair. Sawa. Yes. The only thing that they can do is to hire and fire you. That is it. Pamoja. But generally, you are also the key person to determine the amount of dividend to be paid to them. Pamoja. So why do they require the accounting information? Well, kitu ya kwanza, they want to know the amount of dividend that they are expecting to what? To receive. Ndio huyu ndo determine. So watajulia kwa hiyo accounting information. This is the amount of dividend that they have declared. The directors of the company have what? Declared. Pamoja. Number two also, they want to determine the future of their investment. Future of their investment is that I've invested in this company. Is it generally a going concern? When we talk of a going concern, tunamaanisha the company will continue in or operational what? Existence with no intention of widening up. Sawa. So you write and say they use financial information. They use financial information to determine the amount of dividend. Use financial information to determine the amount of dividend expected to be received. Amount of dividend expected to be received. Expected to be received. And also to evaluate. And also to evaluate the future of the company. Also to evaluate the future of the company. Category number 3 of the user is what we call the customers. Why a customer? Customers want to determine the reliability in accessing the services from that company. Sawa. Whether you are reliable. Pamoja. If I need this product, can I be able to get that given product? Pamoja. So you write and say they require accounting information. They require accounting information to assess the reliability of the business. Require accounting information to assess the reliability of the business. To assess the reliability of the business. Number 4. Number 4, we can also talk about the creditors. When I talk of creditors, we are talking about the what? In simple terms, it's just the financial institutions. Pamoja. Now, those that are giving loans or credits, why do they require accounting information? They require accounting information to evaluate your credit worth. Sawa. Whether they can be able to give you the loan. Sawa. So you write and say they use accounting information. They use the accounting information. They use the accounting information to evaluate. Use the accounting information to evaluate the credit worth of the company. The credit worth of the company. credit worth of the company. Number 5, we also have what we call the government. Also have what we call the government. The government. Now, who is the government here? Si tunajua serikali. Now, what do the government need? No, tunaambiangwa give Caesar what belong to Caesar. That is now the taxation. Pamoja. And also, they can also use this to evaluate what we call the economic stability. How will they use that? Watajua the companies that are in a given area investment. Pamoja. There are those areas that are considered to be risky. And for a government to ensure that there is a economic stability, it must ensure that there are investments that have been done to what? Those areas. Kwa pamoja. Kama wanataka kukuwe na economic stability, one of the major things that they have to do is to ensure, even whether those areas are more riskier or not, investments have to be done on those particular areas. And no matter for them to facilitate on the same, they have to provide what we call what? Subsidies. And no matter unaonanga, if a given area ikona some kuna shida, government has to provide subsidies. Kuna time mafuta ilikuwa bei mingi. And in fact, some of the investors walikuwa shaacha kufanya nini? Hiyo biashara ya mafuta. What did the government do? They provided subsidies. Sawa. And this was to improve the economic stability. And that is also another way. So you write and say, government uses the accounting information. Government uses the accounting information to determine the amount of tax they expect. We can have a short break for Muslim to go and pray. Then we just proceed. Small break, then we proceed. So I was explaining on the government, and I hope you had written that we said that government uses the accounting information to determine the amount of taxes they expect, to receive from the business, and for economic planning. Economic planning I have explained. No. Now the other one is on what we call the employees. Now, why do the employees require accounting information or use the accounting information? Employees use the accounting information to negotiate for better terms of payments and also to evaluate the future of the employment. You utaka kwa kampuni inafanya loss, or you will keep yourself there. Yeah, so you say they use the accounting information to negotiate. They use the accounting information to negotiate for better terms of employment. They use the accounting information to negotiate for better terms of employment. Negotiate for better terms of employment. Better terms of employment. And to evaluate the future of the employment. And to evaluate the future of the employment. That one is what we call the general public. Why the general public here? General public, we're talking about anyone. So, and anyone may want the accounting information, and purposely is to determine whether the company is participating in what we call the social responsibilities. You know what we mean when we talk of social responsibilities? Giving back to the community. Whether they are employing members of the organizations, whether they are participating in what we call the community development program. That is why you also require to do it. Use the accounting information. So you write and say, they use the accounting information, they use the accounting information to determine whether the company is participating, in corporate social responsibilities. Corporate social responsibilities. Now, qualitative characteristics. This is of a good accounting information. A good accounting information. What are the qualitative characteristics of a good accounting information? So, now there is what we call the qualitative, and we also have the quantitative, by the way. So, qualitative and quantitative. When we talk about the quantitative, there are two things. There are majorly two. Generally, let me just say stroke quantitative, though, to differentiate visually. Quantitative, because it's one of the questions I think in financial accounting. It was there on should be April 2024, where they were talking about the quantitative characteristics. You talk about two quantitative characteristics of a good accounting information, and then the quantitative. When we remember, there is a difference between the quality and the quantity. And the quantity here, we are talking about what? The amount. Inatoshana aje. And when you talk about the quantity, I mean the quality, we are now talking about how, so what can I use? How best it is. How best it is. So basically, there are 5 of them. We have 5 characteristics, generally characteristics of a good accounting information. One of it is what we call the relevance. There is what we call the reliability. There is also what we call the comparability. There is also what we call the understandability. Understandability. And then we also have what I call the timeliness. Now, these two here, these are quantitative characteristics. These 3 here, these are qualitative characteristics. Sawa. Hapo tuko pamoja? Yeah, this one, relevance. What do we mean when we talk of relevance? What we mean is that accounting information should be relevant. So if it is relevant, we mean it must be provided on time and should also have the ability to influence the decision of what? The users. So if I talk of relevance here, is on the quantity. If I talk of reliability, we mean a good accounting information must be reliable. Reliable in what way? In making the decisions. Here I will talk about the 5 qualities of a reliable accounting information. Yeah, so let's just explain this. I begin with the first one, relevance, and you say relevance, you can say. First one is on the relevance, and you say accounting information must be relevant, and should be provided on time. Must be relevant and should be provided on time. Must be relevant and should be provided on time. And should be provided on time. And should have the ability. To influence the decision of the users. Should have the ability to influence the decision of the users. Now the ability to influence the decision of the users. The decisions of the users. That is what we mean when we talk about the relevance. From the word itself, how relevant is that information? Because for it to be able to influence your decision, it must be relevant. Relate aje na what you want. There is what you want to know, like for example, we've been able to talk about each of these users. Kuna chenye anataka kujua. So how relevant is it to that information that he wants to do? To acquire from that accounting or generally the financial statement. Number 2, reliability. Say, accounting information must be reliable. Now let's talk about the qualities of a reliable accounting information. Qualities of a reliable accounting information. What are the qualities of this now? The reliability. Qualities of a reliable accounting information. Roman number 1 is what we call the faithful representation. Hiyo ndo ya kwanza. Faithful representation. When we talk about faithful representation, this is what we mean. That the accounting information must faithfully represent the transactions and events that occurred during that particular accounting period. Sawa. Yeah, you're not supposed to include anything else that was not part of that given accounting period. So you write and say, yeah, you see, information must faithfully, that you can write and say, information must faithfully represent transactions and events that occurred during that particular accounting period. That occurred during that particular accounting period. That occurred during that particular accounting period. Occurred during that particular accounting period. What's up? Number 2 is what we call the prudence. That is another quality. Prudence. Now, what do we mean when we talk about prudence here? This requires an entity not to overstate incomes or revenue, but to disclose also all the losses and liabilities. What do we mean in this case? Now, in auditing, there is something we call window dressing. Na hii msiniambie ni kuvalisha dirisha nini? Si kuvalisha dirisha nguo. Sawa. Window dressing here, this normally happens in companies. Sawa. If they want to attract investors. Kama the companies want to attract investors, one of the things that they will do, they will overstate the assets and also revenue. Waki overstate the assets and revenue, or generally, let me begin with the revenue. Ni kumaanisha the profits will increase. Pamoja. Are we together? And then it will reflect a better what? Performance. Yani inaonekana ni kama inafanya what? Kumbe ni nguo tu imevalishwa. Sawa. So generally, when we talk of this prudence concept, inatuambia tusifanye hii. We need to not to overstate the assets. Sawa. Or the incomes. But to disclose what? All liabilities and losses. Kuna watu pia, other companies, they do not disclose the losses or probably the liability. Utapata mtu amekopa loan but he is not disclosing it in the financial statement. Kwa nini? Hawataki the investors wajue kuna loans wameboro. Sawa. Generally ni kumaanisha the company is not geared. Sawa. And as a result, hii inatuambia we need to do what? You just write there, you write and say, this requires an entity. This requires an entity not to overstate. It requires an entity not to overstate. Requires an entity not to overstate. Incomes or revenues. Incomes or revenue. Incomes or revenue or assets. Incomes or revenue or assets. But to disclose all losses and liabilities. all losses and liabilities. The other one is what we call the neutrality. Neutrality. That is also another quality of a good accounting information. Neutrality. Right, and say, yeah, accounting information must be free from bias. Accounting information must be free from what? Bias. Tunamaanisha haifai kuwa na kipendeleo. Kwa pamoja. The reason tunaongea hivi ni because here there are some judgments that you make in accounting. Kama ujui. Sawa sawa. And in making those judgments, you may be what? Bias. Kwa pamoja. So in this case, neutrality means it must be free from what? Bias. And the last one is what we call the substance over form. Last one, the substance over form. Substance over form. Now, substance over form will occur in the cases of hire purchase. Now, this one requires that when accounting for transactions and events, you account for them in accordance to economic existence, not merely their legal form. Are we together? Yani una account for that transaction depending on how the economy changes, not on how you agreed. Are we together? Ni kama in hire purchase unanunua gari, unailipa 4 years. Tumeagree. Sindio? When I'm buying that, I pay the deposit. In 4 years, nitalipa the same amount that I've agreed. No. Why? The economy is changing. Like last year, sindio kulikuwa na inflation. Sindio? So hiyo haikuwa na impact on the interest. It was having impact on the interest. And as a result, mwenye alikuwa ameuza gari yaita, obvious the price has to go higher. And that is what we call the substance over form. When you are accounting for those transactions, don't account them on what you agreed. Account for them on what we call the what? Economic existence. So you write and say this requires transactions and events to be accounted for. This requires transactions and events to be accounted for. Transactions and events to be accounted for in accordance with their economic existence. Transactions and events to be accounted for in accordance with their economic existence. Their economic existence and not merely their legal form. Economic existence and not merely their legal, and not merely, I'm talking of this, merely their legal form. The economic existence, accordance to economic existence and not merely their legal form. Hiyo mmeelewa? Hiyo nayo ukisahau ni vibaya. The substance over form. Ukiona tu unakumbuka hire purchase. Are we together? Now we continue. So those are the qualities of a reliable accounting what? Information. We go to the third qualitative characteristics. So the third one is on what we call the comparability. Tuko pamoja Patrick? Tuko tu hapa. Zote niliagawanyisha hapo, ushaelewa which is the qualitative and quantitative. Sawa. So tuko kwa qualitative now. Is someone who is saying that the network is not good? Is it really to everyone or is just for you? Yes. Is it to everyone or the network is am I audible enough? All right, let's just proceed. Let's proceed. All right. So Eritrea, you can just confirm on your network, on your case. Chepuklu is saying that all is well, so we can just proceed. Comparability. So you write and say, a good accounting information, a good accounting information, a good accounting information must be easily compared good accounting information must be easily compared between different entities between different entities in the same industry, between different entities in the same industry. Now, Mudavadi, I've said on the substance of a form, transactions and events must be accounted for in accordance with the economic existence and not merely their legal form. Transactions and events must be accounted for in accordance with the economic existence and not merely their legal form. That is on what we call the substance of a form. Now we can continue. So what do we mean in this case? Why are we talking about comparability? When preparing financial statements, we prepare them in accordance with the standards. And that is why if you take financial statement of one company, you can easily compare with the financial statement of the other companies. But they must be in the same industry, because there is a way we prepare financial statements of a bank. Usichukue za Kenya Power uende ukombee na the bank. No, they are totally different, by the way. Are we together? Same case to insurance companies. You cannot use the financial statement of an insurance company you compare with the financial statement of a bank. No, we prepare them different. Pamoja. Sawa sawa. Yeah. Number last is the other one, number 4, understandability. Understandability. That one is what we call the understandability. Understandability. On understandability, you can write and say, a good accounting information must be well understood. Good accounting information must be well understood by the users. A good accounting information must be well understood by the users. And that is why we have talked about the users of what? When you are preparing them, you have to put in mind there are people who are going to use what? That information. And your manner, one of the professional ethics, you have to use your professional competence and what? You can. Sawa sawa. Ama ujui the customer can sue you. A customer can sue you if probably you issue a misleading what? If you issue a misleading information to the company. Now, for those that will be doing what we call the introduction to law, or probably those that have done intro to law, you must have come across what we call the law of tort. You know what the law of tort says? Pressure. Everyone knows his neighbor what? A duty of care. Sawa sawa. When I talk of a neighbor, si mwenye mnaishi karibu na yeye. A neighbor is anyone who can use your information to make economic what? Decisions. Pamoja. So if you issue a misleading information to the one who is using that information, he can sue you under that law, the law of tort. Pamoja. Yes. So I've talked about this one, understandability. You must present them in a way that it is well understood by who? By the users. Last one is the timeliness. Timeliness. Say accounting information or a good accounting information must be provided on time. A good accounting information must be provided on time. A good accounting information must be provided on time. A good accounting information must be provided on time. So that is it. Lazima you remember, one of the things in accounting, there is what we call the financial year ends. Sawa sawa. Kuna ile time mwaka inaisha. Sawa sawa. And a financial year has 12 what? Sawa sawa. Nasima lazima mwaka ianze January kwa kampuni iishe December. Kwa pamoja. It can even start on March, can even start on what? June. The only thing that you have to do is to account for how many months? 12. Kwa pamoja. So when we talk about providing on time, is after how many months? 12 months. Kama kuna annual general meeting, you have to provide the financial statements. Sawa. Especially this is for big companies, is when now if the information is normally done for purposes of auditing. Kwa pamoja. We continue now. Let's talk of what we call the that is on the qualitative. We can talk about the professional ethics. Now what we call the professional ethics. Ethics, we are talking about the morals. So, are we together? One of the questions I think should be around somewhere. If it was not in August 2023, should be December, where you were to talk about the professional ethics. It's one of the questions that is very commonly asked. Now, there is one thing that I want to start from somewhere. Now, accounting profession is normally regulated at 2 levels. How? It is regulated at what we call the international level. We'll talk about the regulatory bodies, so usijali. The international level and what we call the local level. Sawa. Local level ndo tuko na ISPAC, ndo tuko na CASNEP, tuko na RAB, that is the Registration of Accountants Board. And then we also have the Accountants Act under the Constitution. Then it is also regulated at international level by a body we call the IFAC. IFAC is just the International Federation for Accountants. This IFAC has subcommittees, and each committee is given its own mandate. Kuna ya kutengeneza accounting standards. Hapa tunatumianga accounting standards. Sawa? Ama financial reporting standard. Ndio maana kipanda kidogo for those that are doing CPA, intermediate, you will be hearing us talking about this particular accounting standard that was established. It was established by IFAC by a subcommittee we call the IASB. That is the International Auditing and Accounting Standards Board. Pamoja. There is also another one they came up, we call the ISBA. ISBA is the International Ethics Standards Board for Accountants. Are we together? International Ethics Standards Board for Accountants. Okay, umesikia nimetaja nini? Sawa sawa. Na sasa hapa ndo I'm coming now. So when we talk of ISBA, this is the one that formulates what we call the Code of Ethics. And the Code of Ethics here will generally talk about what we call the professional ethics, which simply we will be talking of them as what we call the fundamental principles. The fundamental principles that guide you as an accountant when preparing the financial statements. So the principle that will govern you when you prepare the financial, the accounting information generally. Are we together? So, which are these fundamental principles that we'll be talking about? First, you can begin by saying, say, they guide professional accountant, in preparations of accounting information. Guide professional accountant in preparations of accounting information. A guide professional accountant in preparation of accounting information. They include, number one, is what we call the integrity. And this is not only to accountant, but to any given profession. Whether you are a company secretary, whether you are an advocate, whether you are an accountant, these are the fundamental principles that you must follow. Now, this one requires all the professionals to be honest and straightforward in provision of their professional services, regardless of your profession. It be an auditor, you have to be a person of what? Integrity. So you write and say, professionals should be honest and straightforward. Honest and straightforward in provision of their professional services. In provision of their professional services. Provision of their professional services. So regardless of the service that you are providing, you must be honest and straightforward. Number two is also what we call the person of objectivity. Now, in any profession, it has to involve what we call judgment. So, whenever you are making a given judgment, you are required not to be influenced by the decision of others to override your professional judgment. So, regardless of whether you are the Speaker of the National Assembly, you must be objective. You're not supposed to be influenced by decisions of others in providing what, or you in provision of your professional judgment. So you write and say this requires professionals not to be influenced by decisions of others, the decisions of others, in provision of the provisional judgment. Provisions of the provisional judgment. So if they are given a judgment, they must not be influenced by decisions of others to override their provisional judgment. We continue. The other one, number 3, is what we call the confidentiality. Secrecy. So, you're not supposed to disclose information of the client without the permission. So, in any provision, as an accountant, will pay kuniambia this company made this particular profit this particular year. You must maintain the secrecy. Are we together? So, even when you are, however, in some cases, there are situations or exemptions to this principle, by the way. Are we together? There is times when you can disclose information of the client without their permission. Like in number 1, when information is required by regulatory authorities. Seme KRA wamekukujia ama the capital market authorities. Wakikukujia, you have to disclose that information that they need. Are we together? Also, when giving evidence in a court, kama you are acting as an expert witness or as a witness, you have to disclose that information. Are we together? And that is mostly what happens in whistleblowing. They have to give evidence. Same case, in the case where you are defending yourself, kama unaona that information ndio itakusaidia, you disclose it. If you are defending yourself in a court for illegal accusations, then in that case you can disclose that information. Sawa. Or the other one is when you suspect or you know the company is dealing with matters that are prejudicial to public interest, like money laundering, drug trafficking. Are we together? All those things. You, like, for example, if you fail to do so, you can be sued, by the way. Ama unajua the company is dealing with matters like money laundering, drug trafficking, and you fail to disclose, you can be sued under what we call the criminal law. Are we together? For failure to disclose the given information. Come on. So right and say, this requires professionals not to disclose, professionals not to disclose information about the client without their permission. Required the professionals not to disclose information about the client without their permission. Information about the client without their permission. Number 4, professional competence and due care. Their permission. Professional competence and what? Hii ndio niliwaambia, you can be sued under the law of what? Tort. When I talk of professional competence and due care, you are required to exercise your knowledge and what? Skills. Sawa. So kutotumia akili you can be sued. Pamoja. because generally you owe your neighbor duty of care. Ndio maana unaona due care. Sawa sawa. So you right? This requires professionals. It requires professionals to exercise their knowledge and skills in provision of professional services. Exercise their knowledge and skills in provisions of professional services. Provisions of professional services. That is what we call the professional competence and what? Due care. The last one, number 5. Yes? In provision of professional services. In provision of professional services. Last one, professional behavior. Professional behavior. Now, what do we mean when we talk about professional behavior? You are required to behave in a manner that may not make a reasonable and informed third party compromise your professional services. Akose kukubaliana nayo. Yani you have to behave in a professional way. Kwa pamoja. So right and saying, this requires professionals. To behave in a way that may not make a reasonable and informed third party to compromise their professional work. Third party, reasonable and informed third party, compromise their professional work. Compromise their professional work. And that is what we mean when we talk of what? The professional behavior. Is that okay? Na hizo ndo tunaita the fundamental principles of any profession. Sawa sawa. Wewe ni daktari, ndio. Wewe ni auditor, an advocate. You have to comply with the professional. Now, when we meet now in our next class, I will talk about the auditing. The accounting standard. Now, when this is what we'll be talking about. Accounting standards, generally, they are the methods and approaches of preparing the financial statement. Generally, tunasema the rules that govern the preparations of financial statement. So hapa tutajua what are the advantages and what are the disadvantages. And after that, we talk about now the accounting concepts or principles. Accounting concept is now what we'll be using when preparing financial statement. So if you miss on that, then itakuwa mbala. Because that is how we are on the basis of accounting. Hapo ndo tunaanzianga. You have to understand all these things before we get to the presentation part of it. Yeah, so we'll continue from there from our next class. We talk about the accounting standards. Any question? Any question? This is the financial accounting and also the principles of accounting and taxation. Financial accounting and principles of what? Accounting and taxation. One and the same thing. I'm hoping that is well clarified.